Hey everyone, and welcome. In this explainer, we're going to dive into some awesome tools from Trading Options for Dummies that'll help you build a solid toolkit for analyzing the market. Let's jump right in.
You've been there, right? We all have. You stare at a stock chart and it just looks like total chaos. Prices are all over the place, up 1 minute, down the next. It's so easy to feel like it's all just random, like you're just guessing. Is there any method to all this madness?
Well, what if there was a way to cut through all that noise? Look, it's not a crystal ball, okay? But what if you could learn to read the market's language, to make decisions that are actually informed? Let's build that toolkit, starting right now.
All right, tool number 1 in our toolkit is all about reading the charts. Now, don't let that scare you. This isn't about becoming some kind of math genius overnight. It's much simpler. It's about learning to see charts for what they really are, a story about buyers and sellers. And honestly, that's the whole secret. Every single wiggle you see on a price chart is just the outcome of this epic tug of war. When the buyers are feeling confident and they're winning, prices go up. When sellers take over, prices go down. That's literally it.
So that brings us to our first big idea, support. The easiest way to think about this is like a price floor. It's that price point where a stock just looks like a bargain. And you see a flood of buyers jump in saying, yep, I'll buy it here, and that stops the price from dropping any lower. And you guessed it, on the flip side, we have resistance. If support is the floor, well, this is the ceiling. It's that price where sellers start to show up in force. They're thinking, this is a pretty good price to sell and take some profits. And all that selling puts a lid on the price. So just log this into your brain. Support is the floor holding the price up. It's the buyer's territory. Resistance is the ceiling pushing the price down, and that's the seller's territory. Just understanding these two concepts is the absolute foundation for reading any chart. Okay, that's great for one chart. But the market isn't just one stock, right? It's made up of all these different sectors. You've got technology, healthcare, financials, you name it. How in the world do we figure out which of those sectors are leading the pack? So let's grab our next tool from the toolkit. And this is a really, really important question. I mean, is the tech sector doing well because it's just an amazing sector? Or is it just kind of rising with the tide because the whole market is going up? How do we know if it's actually strong or just riding the wave? Well, turns out there's a tool for exactly that. And that tool, as Trading Options for Dummies puts it, is what we call a relative strength comparison. It sounds technical, but it's a super powerful way to see who's really winning. So how does this thing work? It's actually way simpler than it sounds. All you're doing is taking the price of a sector fund, like a tech ETF, and dividing it by the price of a big market fund, like the S&P 500. You plot that calculation on a chart, and if that line is trending up, boom, your sector is outperforming the market. It's the stronger one. Check this out. You run the numbers for the technology sector against the S&P 500. If that line's climbing, you found a leader. But then you look at, say, the utilities sector, and its line is falling. Well, that one's lagging behind. It's a super simple visual way to spot the strong from the weak. So why does any of this even matter? Well, it all comes down to something called sector rotation. You got to remember, the big money, the institutional investors, they're always shifting their cash around, moving out of the weak sectors and piling into the strong ones. By spotting those strong sectors, you get to ride that wave of momentum. You're not fighting the current, you're flowing with it. It is literally like finding the strongest horse to bet on in the race. So we can read charts, we can find the winning sectors. Okay, now for maybe the most important part of all. How do we actually use all this stuff to plan a trade? And even more critically, how do we use it to manage our risk? And this right here is a huge mindset shift. Those floors and ceilings we were talking about earlier, they're not just pretty lines on a screen to look at. Think of them as action zones. They're decision points on the map where you can actually do something. So here's how it plays out in the real world. That support level, that's a pretty logical spot to think about buying. Then you can place your stop-loss order just below that floor, which means you're defining your risk right from the get-go. No surprises. And that resistance level, that ceiling, that becomes a natural target to think about taking your profits. See? It's a whole framework for a trade. All right, let's pull this all together. We started out feeling like the market was just pure chaos, right? But now we've gone from that chaos to having a clear, simple toolkit that can bring some real clarity to our analysis. And it really boils down to this simple 3-step toolkit. Step 1, read the chart. Understand the story of its floor and its ceiling, support and resistance. Step 2, find the winners. Use relative strength to see which sectors are leading the market.
And step 3, plan your move. Use that analysis to map out your entries, your exits, and your risk.
Okay, but let's be super clear on one last thing, and this is important. This toolkit is not a crystal ball. None of these tools will ever predict the future with 100% certainty. That's not what this is about. The whole point is to give you a framework to make smarter decisions and to always manage your risk. That's how you shift the odds in your favor, and that's how you stay in the game. So think of it this way. You don't have a crystal ball, but you do have a map that can help you navigate the market landscape. The only question left is, where are you going to explore first? The exploration is all yours.